Thank you, John, for confirming us. So yeah, I was asking Paul what kind of DCAA audit exists, and normally which one are the ones that small government contractors most likely actually face. And we can go from there if it's okay with you, Paul. I'm sorry for
Okay.
repeating you again.
The types of contracts or the types of audits are really based on whether or not you have cost reimbursable contracts like CPFF, cost plus fixed fee. So if you're just in the fixed price and T&M world, you probably ask yourself, I've got a DoD contract, I'm a prime, how come I don't see DCA? Not that I want to see DCA. And the reason is because you need to have a prime. You're the top person running it, and it must be cost reimbursable. If you're a sub to primes, you probably won't see DCA unless in a rare case they do something called an assist audit. So the CPFF audit gets you into this world and the types of audit for you, like if you're in the SBIR where you start with a fixed, phase 1 and phase 2 or 3, you go cost reimbursable under the Small Business Innovation Research or STTRs. Then what happens is they do an accounting system survey and they will use the SF 1408 checklist. It really is not that difficult to get through. They want to see you live, how you generate a report out of any accounting system. And that's really where they're going with that.
Great. Thank you, Paul, for the answer. Just for the people that is entering now to the Zoom, we are talking with Paul Calabrese. He's a principal at GRF CPAs and Advisors. He works a lot with government contractors and compliance matters. And he also was a senior DCAA auditor. So he was in the other side and he can tell us how that side looks like and if that is really scary as it looks like. So, well, we talk about the different audits that exist. We spoke about how now the DCA is not as scary as it was. And now I want to start speaking a bit about the first minutes and the initial of an audit, on a DCAA audit. So can you walk me through what you're actually looking in the first hour and what tells you whether this is going to be an easy audit or a hard one?
Okay. That's an interesting question. Today, if you probably are not aware, everything is almost all remote. So the very first things you're going to see is they probably won't knock on your door. They're going to do it via Zoom or Teams, one of the two. And that's how it'll begin. It'll begin with an entrance conference, to be honest with you. And your interactions with them are going to be very limited. So you won't have to worry about this. The only time what you're saying, Alfonso, is if they were at a big site like Northrop Grumman. So there are still those big companies and they're on site. Okay. And I used to deal with on-site auditors years ago, 4 of them in the same room. And then those kinds of things, what you're saying applies. In this, they're basically going to go over things like if they started even an accounting system survey or an incurred cost audit to settle your annual indirect rates, they're going to do something called a walkthrough. Besides the entrance conference, they will go through a walkthrough because what they want to do is see how things work. So, and that will be a prearranged meeting. So anything that mostly they're going to do, you will probably be prepared because they will tell you what they want. And we can go on, but there's a lot of questions. So before they audit, it's just like any other financial statement auditor. They need to understand what you have, what are your procedures, how are you doing it? And that gives them a sense of what they call audit risk or a risk environment for them as far as your company goes. And then it tells them how much to do the audit, if that helps.
Absolutely. So, well, my next question was going to be, if there's a specific document or number that you ask when you start the audit, but I understand that you mentioned some of them. There are rates depending on the type of audit, like it's like normally the general ledger, the P&L, how would you
Okay.
select the documents?
Okay, that's a good point. The contractor selects nothing. Everything is designed and comes from the auditor. The auditor does all that sampling. Part of that beginning, after they do the risk assessment, if it's an incurred cost audit, which for most government contractors that are small, that is the biggest audit you're going to see, most likely. Besides an accounting system audit, the SF14, all they're going to do is have you to kind of see that you have a system that works and you have some basic policies and procedures. So when you think of an SF1408, do you even have a system that can do cost reimbursable contracting? It's what a lot of us experts call a very light, easy audit. But when they do an incurred cost audit, yes, that's when they begin to dig. But the issue is they will give you the sample. So they will do random sampling. But even with the current audit that I'm assisting with a client, they came in and they did some initial walkthroughs for an incurred cost audit to settle indirect rates. And they
Yeah.
asked a bunch of questions. They had a lot of stuff. And then they disappeared. And they didn't come. They still to this day have just now, a month later, come back and said, here's a sample now of what we're selecting. Will you pull those documents for us? So they ask, they sample, we then pull the documents they need.
Great. Thank you for that answer. So what I hear is that cost is one of the most important things when an auditor come in, and that is really related to a lot of things that we've been working on this series, especially in labor cost, because it's one of the most difficult ways of having it correct. There where labor distribution plays a big part. So I wanted to go to the next question, which is going to the contractor size. Between the notice and your arrival, what should the company be doing that week?
Okay. Well, these are great questions. To be honest with you, they need to be audit ready. So the day you sign, and the leadership is going to know, we just got a cost reimbursable contract. That comes from your development, proposal people, business development. It comes from the executives. If you're a small person, the owner obviously knows, maybe the one signing it, your contracts. If you're a little larger, your accountant. What am I saying? At that point, you should begin to have, and you should be audit ready. And basically, if you want to be audit ready, go back to Google SF1408. The second side of it is, just like I said before, that they do that review, is a checklist. And, we could do a follow-up of this and get into some of these audits if everyone decides they want to do that. But basically, you have to have a system that's ready. Before you think of what documents or anything, you have to have a system that's ready. And then that begins with, you can't do everything. You need to have obviously specialized software. And I know WiseCost has some of those special solutions for people so they can be audit ready.
Right. So we talk about that form. In fact, we send on our second session, I think, this checklist, which is a dynamic checklist we prepared for you, basically, for government contractors. So if you want, you can go to the website that I just sent in the chat, and that is like a more dynamic way of seeing if you are prepared for the form, which is required for most of the contracts. And from your side, what is the main difference between a company that's ready and the one that is just, let's say, hoping?
Well, there again, it just like I said before, you must be audit ready. So what you would have is you must begin to have some kinds of internal controls. They usually are written. They should be policies and procedures or processes that what we call in the accounting world addresses the risk environment. In other words, the risk that you're not complying, or you want as an owner to comply, but somebody isn't doing what they're supposed to doing, and then DCA writes you up, which of course is where some of this fear comes in, because when they do an audit, they certainly can write up a deficiency, like with timekeeping is often the one, and then they send it to everybody, that every procurement office you're working with, and that's not going to be helpful. So you want to have internal controls, policies, procedures, and then of course you want the systems, and it then has to go back. Not everything is in the system, for sure, but if you don't have a strong, job cost, labor distribution, ability to bill, ability to do indirect rates, then you're going to have problems. And that's the one that's hoping. And if you're hoping, you're really that it's too late, right? It's too late. You have to, when you want a government everyone here probably has at least a fixed price or time and material contract. You must realize that you've stepped into a world of compliance, and realizing some entities, of course, are small and they have limited resources, but you need to invest. And some of that is the software that you need to do the solutions.
That's great, Paul. Thanks for the clarification. So we're going to go to the next segment, which has questions related to what actually get flagged in an audit. So the first segment was more related to what to do before an audit came in. And from my conclusion of that first segment is there's not much things you can do different once you know the audit is coming. Like, you should be ready before you start the contract. And for that is the accounting setup, the correct timekeeping, doing labor distribution, and you need to do that before you win the contract. And going to what actually get flagged, I'm going to start with the first question, which is, across all the audits that you did, what are the most common findings you'd find? Not the scariest one, the most frequent one.
Okay. Well, we'll talk about two audits real briefly. One is actually when they come in and do a proposal audit. If you do have DCA coming in, knocking at your door for a proposal audit, usually the government contractor should be very happy, because that means your proposal and your potential contract is, potential for winning is working along the path. But what's sad is that most government auditors, DCA, complain they don't even have the backup documents. Well, I'll go look for it and so forth. I'm talking about on a proposal. That's not a smart thing. And it can also be for an incurred cost audit, the same thing where you're settling indirect rates. The worst thing is just not being prepared, not having. Now, you don't know what they're going to sample or select as far as the documents they want to test, whether it be labor, non-labor, journal entries, or whatever. But you should have a system so that you can pull up those documents or be responsive. And I'll just say this real briefly. If some people know that DCA contracts out, so do other agencies, is something called an independent public accounting firm, IPA. And they just do the exact same audit, and they work for DCA. They're just contracted out. And the reason I'm mentioning them is the worst thing you could do by not being prepared is when they ask for something and you're delaying it, it's your fault, you're very slow in responding. That may hurt you, because say they selected, and sometimes they can select 50 to 100 different items, whether it be both labor or non-labor, and you don't meet the due date and they're behind and they're behind. Well, they have a contractual end date. So if they can't meet their end date because you're slow, they may mention you were slow in providing it, but guess what they'll do? They'll unsupport your costs, which mean they're all questioned or disallowed. So be very careful with IPAs and even with DCA when they give you a time constraint to follow it. Now, I know sometimes they're very short on it, and you need to be realistic and be, step up, and don't be afraid and say, I need another week, or I'm doing this and I need it. But to just let these due dates go by and not provide them anything, especially a contracted IPA, could be detrimental to you.
Thank you, Paul. So is there a pattern with small and mid-sized government contractors versus larger one?
I would say, obviously, the saddest thing or the most difficult is that the small contractor doesn't have the advantage of all the access to compliance people. You know, a larger one will either build that in, the CFO that they hire or controller has had prior experience
Yeah.
or whatever, and that helps them. And of course, very large groups, they have a whole office, you know, that they have what they call compliance officer or specialist. So what happens with the small people is just that's why this kind of session, and if you can get to hear DCA, but this session too, and other sessions like this are very important. The only other thing you can do is, you know, try to get access with a few of the firms that have consultants and just at least have them on notice or something, because that's the difficult thing. The small firm just doesn't have all the resources. But you may not realize it, but many small government contractors, when they get a contract, they have maybe as many as 100 clauses to comply with. It is daunting.
Yeah. So for people that came in later, we are talking with Paul Calabrese. He's an ex-senior auditor and a principal at GRF with a lot of experience in DCA compliance for government contractors. We are talking on what happens with an auditor coming to a compliant process. My next question is about floor checks. They normally have a very scary reputation. I understand that now they do it virtually. What were you actually listening when you asked an employee what they were working on? What are you looking for?
Okay. Well, it's a combination. Before they go in, they're going to see, let's say your time report is just a week long to make it simple. And say they come in on a Thursday. So they're going to want to see, and let's just pretend whether it's electronic or manual, they want to see the time charges for that work week, Monday, Tuesday, and Wednesday. And first, if they don't see those things fall, they're not there, you know, because you're supposed to post your time at least daily, right? And if they don't see that, that's going to be a problem. Another, of course, scary, if you want to say, and I don't blame you, is that you don't know when they're going to show up. But now pretty much because they have to schedule. But if you have an incurred cost audit to settle rates, then, and it's cost reimbursable contract, you will have DCA at some point want to do a floor check, which is a live check. Now, the other thing that they do, of course, is what you're alluding to, as they ask questions. They've always done that. I did it years ago, the same thing. I was even hired by a firm to outsource just to test their accounting system because they had problems with DCA. And the types of questions they want to know is basically, you know, show us what you charge, what document are you working on, and then they may go back and confirm in the work statement of the contract that, yeah, you would be doing this kind of thing. And if they were at your desk, if, you know, the old scenario, they would look at those documents and see what you're doing. They have a lot of questions on something called uncompensated overtime. Basically, beyond the 40-hour work week, are you working? What do you put down in your timesheet? You say it's 40 hours, but in reality, you work 50 hours. And then if you really are working 50 hours, how is that prorated? If it's just one cost reimbursable contract, that's fine. But if you start to split it, then there are other issues. So they want to look for something called total time reporting. That's a big thing with them. But they also really want to get down to, how do I know you're charging the right number? In other words, the company gives you a charge number or a title or something. How do I know that that's the right thing? And you have to prove that to them.
And you normally, for doing this, you speak with employees, you speak with anyone in the company, or who is the person that is in charge of answering these questions?
Each employee. What you
Okay.
can do, if it was in, you know, you were actually in a company office, the controller or CFO, one person from the company can at least escort the DCA auditor, and they'll listen. They can't interrupt, but they can listen. But timesheet reporting, beyond the controls, yeah, they'll go to the CFO type. But once you're beyond that, they will go to each individual. So if it's done virtually, they probably would allow a representative from the company to at least be present. And I think they would want it that way. So if there's a dispute about something, they would see it. And probably because now we can record those things, they probably record the session as well. But they talk to employees directly.
Right. And is there a mistake that looks minor to the contractor, but it's a big deal for you, or vice versa, like something that looks scary to them, but it's really isn't?
Yeah, there are a lot of things. First, like I said, not filling your timesheet out daily. You're going to get a letter.
Okay.
It's going to all your PCOs, procurement offices on that. And if you're not able to clearly explain to them what you are doing, sometimes you'll get people that want to explain everything and then some. Like, yeah, the company told us we're only supposed to work 8 hours, but I work 50 hours because I'm, even though it's a 24-hour day, I'm doing everything. So you're going to get a few of those like that. And you almost have to train your employees and kind of go through a mock thing so that you're prepared when they do it. And I mean, I even have kept the same basic questions if we ever want to do a session on that. And how you should prepare people if you're up to doing that. So maybe
Yeah.
that helps.
Yeah, absolutely, it does. So if anyone has a question, please share it to the chat, and we're going to read it. To continue with our questions, I was going to ask you this line of some of the things you spoke about, but I wanted to know what separates a company where the audit takes just a few days from one that takes weeks. There's something that they do.
Okay. A lot of that really on the audit side is really on the auditor. The only thing that takes time from the contractor's perspective, and that's normally and always with an incurred cost audit, again, where they have sample selections, is they give you stuff and then you've got to get back to them. So in the very beginning, they're doing something called a risk assessment. In other words, they want to know just before they perform their audit, which is an audit program, and all that is just the steps: do this, do this, do this, do this. Okay. And they have to say, I did this, and reference a work paper, whatever, and what happened. But before they do that, they do something called a risk assessment. And small firms get caught in this because the risk assessment might be designed for a large company and they're really small, and they'll say, do you have this control? Do you have internal audits? Do you have, all these major things that a major firm might have? And you're just saying no, but it's like 10 pages. There's also something called contractor information form, something like that, where they try to get to know you. And it's daunting because it's just 11 or 12 pages of stuff you have to fill out. And you might say, okay, they did that last year, but then this year it starts over again. They send you the same form. You got to do the same thing. So if you get forms like that and you have dealt with the auditors over the year, do it electronically, save it, and then you'd only have to update if there were changes and then send it to them. So what's taking long periods of time to respond really has to do with what the auditors are giving you.
Sure. We have a question of John on time audit. So you spoke about how employees need to log time daily, and he's asking what happens if future time is found to be input.
Well, if the future time is vacation, it's okay, right? Because the person isn't there. And so what you would do is put in your policy, because that's the way DCA works. If there's future time in there and let's say today is Thursday, and let's just say the future time was tomorrow, just one day or weeks, you have a policy that says the supervisor can sign on behalf of the employee because the employee doesn't. But when the employee gets back, they will sign too. but they're already gone, so there's nothing you can do. So there's a policy. How do you deal with future time for legitimate things like vacation or something else, or God forbid something bad happened and the person had to leave, and let's say go to a funeral, they're not going to worry about time. I mean, that is normal. And so you build policies and what management can do, and DC would see it. And then, of course, when they come back, they do indeed, the employee, even though it's after everything, they'll still sign and say, yes, I was on funeral leave or bereavement leave and things like that. But beyond that, what the person may be trying to get to is, projections of time are not appreciated because everything with cost reimbursable contract, and that's really the world of cost reimbursable, is actual time charged. So you really can't project. Sometimes in the old-fashioned world, because I live in a period where everything was done manually, maybe hard for some people to believe, then like people would collect timesheets for a certain period. And remember, offices, are separated, and maybe all they had was like a fax machine, if you even know what a fax machine is, because knowing the new technology and
I know.
everything, what's a fax machine? It's like, what's a photograph? So I understand that, but they would have to fax the things, and they needed your time a little bit ahead of time so they could get it in the office. So then by Monday, they could put it in the computer and so forth. That kind of thing really is not proper. I don't care whether you had a manual system or an automated system. I'm sure that Wise Cost and other systems are automated timekeeping. You can't use that excuse, hey, I had to project because they asked it early. No, you really can't. The company has to set up procedures that they have to wait until the final period is over before, so that everything is actual, unless it's a planned thing. And usually, again, planned leave would have a leave form. So DCA could look at, oh, okay, they would plan to be off 3 days this week. They see that, and then the supervisor has to sign to get it into payroll or whatever, but the person comes back and signs it. So yes, future leave, you can't, future charges, the government will not accept that. That will cause lots of problems.
Okay, very, very clear, Paul. Thank you for that. So
Mm-hmm.
I'm going to start closing the interview and asking you my
Okay.
last questions. So I was going to ask you about what is the biggest myth GovCons believe about DCAA that you wish you could correct? Is anything you
Okay.
could think about?
No, yeah, I can give it to you. It's a little bit of an answer, but first of all, and because people kind of missed the very beginning, unfortunately, is that DCA today is not trying to gotcha. It's just not their mode. When I did it, yes.
Okay.
Now, no. They're not really out to really destroy you. They have outreach training programs, and wherever through state CPA societies, they have it online through associated. You should seek them out. They want you to succeed. They have less workforce. It went from 4,800 to 3,900. So there are less things. And so, but DCA will tell you the what, but only people like Brian here with his firm and with Wise Cost Software can you do the how. In other words, they have independence, because the what is, yeah, you need a system, an accounting system for sure, and it should be automated. But what system, and they start to name names, which we're not going to do here, of systems, and they'll say, we can't comment. That's independence. That's the how. And we stay out of the how to do that. But the biggest thing relating to DCA and everything we've talked about today is that compliance, once you sign that first government contract, especially if it's cost reimbursable, you have to know that there's a cost to compliance, which means you need to invest. Even if it's limited, because they're small firms, then use your limited resources. And that's why I work with Brian and his Wise Costs and some of the software solutions that they have, because it's reasonable. It will solve some of the issues that you need, and that's a part of the investment. So I'll turn it over to Brian.
Okay. Thank you very much, Paul. That was really, really clear. And yeah, I think you answered all my questions very well. So For the next section, which is a shorter section, I will speak with Brian Wenroth. Brian Wenroth is a CPA with more than 20 years of helping government contractors in accounting, in compliance, but also he's my partner in Wisecos. So I wanted to speak with him a bit why he started Wisecos, how he was working in labor distribution before Wisecos, and how he's doing now those tasks. And besides showing the platform and the time tracker, and if you use it or not, I think it's really valuable the insights that he has because his experience with small and medium government contractors is the same. He's done the same things that you need to do. So, Brian, hello. I'm going to start asking you, how did you actually do labor distribution for your government contractors client?
Sure, Alfonso. Thank you. Yeah, thank you. And Paul, yeah, that's the story could be long, but in short, we lived on Excel. As Paul has been speaking about, just all this different type of compliance requirements and processes with these auditors looking at the very detailed information. In the past, when we did labor distribution, we had to live on Excel. Um, Labor distribution relies on time of the employee's time and what they put towards the projects. So what we would do is we would work with our government contracting customers and we would see whatever time entry tool they have because we do need the time that's spent on these projects by employee. Hopefully they'll be using some type of time entry tool out there. We would try to even suggest time entry tools similar to WiseCost, but still didn't have the functionality, but at least some functionality that we could make the process somewhat efficient. Once we got their time entries from the employees, we were then able to put this into a spreadsheet and understand the cost of what the employees were paid in the pay period. Usually this was done each pay period to be able to align whatever time entries were put on projects to the cost, the labor cost that the employees had, and then be able to create calculations inside these spreadsheets to be able to allocate the specific labor costs to each time entry and each project that the employee worked on. The more employees a contractor had, the more time consuming, the more room for error that could be created. However, I mean, this was what we had to do. We had to be very meticulous on using these spreadsheets to be able to do these labor distributions. And once we're able to do the calculations, make sure that we do our own spot checks and reconciliations, we're able to then break out the total labor cost on each one of these projects that a government contractor would be working with, and then input this usually large journal entry into QuickBooks or another accounting tool to be able to allocate labor or do a labor distribution function.
And why not just move your clients to Deltek or Unanet? So I'm hearing that probably your clients were working with QuickBooks Online, and actually, from my understanding, Deltek and Unanet do these labor distribution processes. Why you didn't change?
Well, and thank you that. First of all, we've been working with QuickBooks Online for many years, almost since it existed. And I mean, it's the number one accounting software for a reason. I mean, we rarely try to get someone to leave QuickBooks Online. It's affordable. It's most, I imagine, or there's more users, more accountants who know how to use it. So therefore, that's important to kind of know about that labor pool of accountants that could use it. And there's more content online to be able to use it effectively. It's just a very powerful tool. Now, it doesn't have some of the functionality that WiseCost has to layer on top of it to help government contractors be DCAA compliant. What would happen in the past is that if there was once a government contractor received a cost plus contract, firm fixed price contract, or some type of need that they have a number of employees that these allocations, these calculations in the spreadsheets they were using weren't justifiable enough to go, hey, this isn't going to work. It's going to break. And it was going to break. That we then had to tell them, okay, what other tools are out there? Deltek and Uninet are the tools that provide this core functionality. However, the thing is, though, that these tools are very expensive. Some of these tools the cost could be 10x of what you'd be paying for something like QuickBooks. Deltek and Uninet are accounting software, so they can take over what QuickBooks does. It's an accounting software. It's a ledger system. Those the same thing with Deltek and Uninet. However, like I said, it has those core functionalities like labor distribution and calculation of indirect rates, etc. But the cost is there. There's going to be a cost. In addition, with these tools, someone then has to leave QuickBooks Online. If they're they like QuickBooks Online, they like the interface, they're using it, they have to leave it because they have no other choice. In a way, it's kind of tough because it's almost like they're handcuffed to have to go to these different tools just because of these new compliance requirements. So they do have to leave it. And to be able to leave it could take months to be able to integrate or start using one of these other tools out there. We've seen where it could take 3 to 6 months for someone to be able to implement a Deltek or Uninet. In addition, with these tools, to implement it isn't just like you click your finger and all of a sudden you're using Deltek or Uninet. It could take 3 to 6 months, and the cost of it could be, as Paul would say, it could be daunting to think about talking to these consultants that know how to use Deltek and help you convert or transition from QuickBooks to one of those tools. The cost could be tens of thousands of dollars to set it up. And like I said, it could take months to be able to actually start using the tool, and time is precious. So that's what's in the essence there when someone converts it over to it. But lastly, like I said, QuickBooks is the #1 software out there. The content to use it, I can go on YouTube right now and learn how to use some core functionality with QuickBooks and hopefully at least kind of do some day-to-day accounting of invoicing, payroll, paying bills. To be able to go and use a Deltek or Uninet is going to be harder. You're going to have to learn it. It's almost like to have someone that knows it, it's like having like a unicorn, because they're very special people because they've had to specifically go to classes, get certified on how to do it. So there's a lot more time commitment, and that is kind of risky for both the government contractor and even ourselves who actually performs accounting services for small government contractors, because that person becomes very special. If something was to happen with that person who knows how to use Deltek and they were to leave, it could be much difficult to find another candidate who has those qualifications and that skill set to be able to use that tool because they don't have that experience. So that's a risk. And for example, even from our side, just to tell you a tough story, we ourselves used to have a customer who can transition from QuickBooks to Deltek. And we specifically trained our team member on how to use Deltek, got him certified, etc. And then one day he calls me up and he goes, "Brian, I'm transitioning to another company." I was like, "Oh my gosh," I was very sad to see that, because yeah, he was a good team member. But at the same time, I wanted to know, just wanted to go to see what happened, see where he was transitioning to. And it's a sad situation, but he was transitioning to the firm that we were actually performing accounting services for that used Deltek. So it was a tough conversation there, sad conversation. I mean, good for him to be able to continue to develop his skill set. We wanted him to learn Deltek. At the same time, though, losing him is the risk, whether it be the government contractor itself and how special the time and commitment that someone needs to learn using that tool could create a risk factor for the government contractor.
Understood. So basically, Deltek and Uninet are really expensive, are really difficult to learn, and implementation can take months or even a year, 1 year. And it's really difficult also to find good labor that or CPAs, accountants that can work with Deltek or Uninet. So it's not only that the fee is more expensive, but also the professional services. At the same time, what I'm hearing is that QuickBooks Online alone doesn't solve some of these issues like indirect rates and labor distribution. So how are you working right now with government contractors? What did it change in your firm?
Well, at its core, Deltek and Unet do labor distribution, and they calculate indirect rates, and they allow indirect costs by indirect rates to be allocated directly to a contract or a project. QuickBooks Online doesn't have that. It doesn't have a labor distribution process where that means allocating someone's labor costs to a specific project. It doesn't have that automation. It doesn't have that ability. That's why we're using spreadsheets. It also doesn't know how to calculate indirect rates, because to calculate an indirect rate, you need to have an understanding of the allocation of direct costs and indirect costs. Direct costs specifically relate to a project. Indirect costs are costs specifically related to the organization as a whole. So you need to know those two breakouts. That's required in the form SF1408, which Paul was speaking about, and that's what an auditor is going to want to look at and understand how those allocations are being done, expenses to be allocated to direct or indirect costs. QuickBooks Online can't automatically calculate those ratios, those percentages, and those rates. And from there, because of this, indirect costs cannot be specifically allocated to a project because you need those rates to be able to do that.
Very clear. So basically, to sum up the conversation and to give the last announcement, what we did with WiseCost is prepare and build a layer that works on top of QuickBooks Online. So when you start working with WiseCost, you can be compliant while using QuickBooks Online. We don't replace QuickBooks Online, and the migration and implementation can take 2 minutes, because the first thing that we will ask you to do when you create a WiseCost account is to connect your QuickBooks Online account, and we will migrate in 1 minute all your information, and we will build the rates, the labor distribution, while using our time tracker. So if it's okay with you, Brian, I can just announce the next session, or if there's anything else you want to mention, or
No, this was good. You explained
okay.
it well. Thank you.
Great. Okay. Thank you very much, Brian. And thank you again, Paul. I'm going to share my screen just to mention what are we going to send you next. Please stay this next minute. If you have any other question, just write it in the chat. So this is what we are going to send you in a couple of minutes. We are going to include the DCAA audit program, which is the actual survey that the auditor use when they do an audit to a government contractor. And also we prepare a dynamic prep checklist, which is really useful because you can use it. We convert this audit program in a more dynamic checklist, so you can see by yourself if you are prepared. I can show it to you, what I'm going to send it to you. So basically we segregate in 10 items the different things that you're going to be evaluated by, and you can select which of these rows apply to your case. And to finish, I just want to announce the next webinar is going to be in 1 month. We are going to speak in bid and proposal. So our last sessions, we spoke about how to be prepared for an audit. We talk about labor distribution. We talk about indirect rate. We talk about different aspects of a DCAA compliant accounting system. And now what we want to start helping you is in growing your business. There are also aspects about how you manage finance, indirect rates. So for example, when you bid for a T&M contract, you need to present in their grade. So it's really important to know how to manage your accounting, and also invite you to try Wisecost. So there is a free trial. There is no need for a credit card. You can just log in or sign up in our website and try it out. Just try it out, play with it. It's really easy. It's really friendly. You don't need a lot of expertise. We also have different resources. So yeah, that's all for today. Thank you very much for being here. Thank you again for Paul coming and answering our question. It was really an honor to have you here. And Paul and Brian, thank you again for answering the questions. So see you next time, and bye.